If you count it, I have 4 degrees. They say if I had any more degrees, I could be a thermometer. As my mom likes to say, my son is a doctor, just not the kind that can help anybody. So anyway, it's nice being here. My job as the economist is to give a broad overview, kind of look at the forest from above the trees, whereas the CEOs will come and give you a view from within the forest. So I have a lot of boring slides. The good news is I have 12 minutes. So I will work through these pretty quickly. But I'll just say a few words in summary in case you get bored with the slides. This year was a very interesting year, has been a very interesting year for the state of Texas. As you know, with the oil price decline that we experienced since the middle of last year, the state's economy has really gone through some significant changes. At the beginning of the year, my forecast was that the state's job growth would slow but not decline. I think when you come from outside the state of Texas, you think of Texas as going up and down almost directly with oil prices. And obviously that's not the case. I think business people within the state know that. There's a lot of other things going on here besides oil and gas. Although we'll take the oil and gas, believe me. The energy industry's boom in recent years was less to do about price and more to do about innovation. But nonetheless, I was expecting a slowdown in job growth, but not a decline, and that's what we saw. And around mid-year, when prices stabilized, or early summer, they stabilized around $60 a barrel for a couple months. People in the oil and gas areas began to breathe a sigh of relief, thinking that the worst was over, and there was somewhat of a positive outlook for the second half of the year. But obviously, oil prices have come down further since then and started to stabilize around $45, although yesterday I think they got up to 48. But once again, there's going to be more layoffs in the oil and gas sector. These futures contracts from last year is expiring, so there's going to be some more pain in the oil and gas sector. Nonetheless, my model says that job growth for the remaining months of the year will be slightly less than 1%, but still positive, because there's a lot of things going on in the state's economy, including a petrochemical boom that's going on along the Gulf Coast. It's creating thousands of construction jobs, building these petrochemical plants because of this large supply of natural gas that we found over the last 5 years or so. So the outlook in general is for the state's economy to be weak but positive. We'll end the year about 1% job growth, which will be the first time in 13 years that we grow slower than the national average. But as I'll show you in a few minutes, that we're well above most oil and gas states. So it's kind of a good news, bad news story. Is we've obviously slowed with the energy sector, but we're good. We're doing well relative to other oil and gas states, and much better than what we did in the 80s for a similar oil price shock. So that's my story. If you want to take a nap or whatever till the next speaker, you can go ahead. But so in the last 5 years, the Texas economy, as you know, has done well. But it wasn't just energy. We didn't go through the construction debacle like other southern states, other sand states in particular. And so our construction sector didn't get hit as much, particularly residential. And our exports, Texas, most people don't think of Texas as a big manufacturing state. We're really not, but we are a big export state. By any measure, we're in the top 10 states in the percent of jobs tied to exports. And exports from Texas have been growing quite strongly. Last year was very strong and broad-based across sectors, and obviously with the oil price decline, we saw a weakness in the economy. It wasn't just the oil price shock, it was a strong dollar hitting our manufacturing and slowing our exports. But overall, once again, I expect job growth to be about 1% after 3.6% growth last year. And then going into next year, if oil prices are very hard to predict. I don't try to predict them because I've learned not to. But if they stabilize around where they're at now, I expect job growth to pick up slightly next year, maybe to grow about 2% as these cuts kind of work their way through the system. So overall about 1% this year and about 2% next year. Obviously, if oil prices pick up, growth will pick up further, and if they decline further, we'll have some further weakening from that 2%. So if you look at Texas, this was before the oil price shock. Texas was the third fastest growing state in terms of job growth in 2014. And the other black bars here are other oil and gas states throughout the U.S. And you can see that oil and gas played very little role last year in what states were growing strongly and what states weren't. In the first couple of years of the recovery, oil prices had bounced back, and oil and gas states were mostly to the left of the red bar, which is the U.S. You can see that the fastest growing state in terms of job growth last year was ND. That is not Notre Dame. That is North Dakota. But many of the sand states that typically grow fast have been bouncing back, like Florida being the second fastest. So what about this year? If you look at growth so far this year, North Dakota went from the fastest growing state in the nation to the second weakest in the nation. So you can really see North Dakota is like West Texas. I mean, it's almost a very, very large amount of their economy has been the recent boom in shale. But Texas, you can see here, it's the 32nd fastest growing. It's growing about 1%, a little over 1% so far. And you can see that it's doing much better than the other oil and gas states because we have a lot more going on than just oil and gas. If you look across sectors of the Texas economy, to the left here, the blue bars is the oil and gas industry. These bars represent job growth from 2012 to 2015. 2015 is the slash bars that's so far this year. And you can see oil and gas, after growing about 9% job growth last year, is shrinking by about 15% this year. Big swing in oil and gas. We've all seen the headlines. Other areas, mostly the weakness has been centered in the goods sector, oil and gas, construction, and manufacturing. You can see manufacturing jobs shrinking quite a bit. Why is that? Well, our manufacturers produce a lot of stuff for the energy sector. Oil and gas field equipment and fabricated metals have been weakened because of oil and gas. And plus, we export a lot of stuff. We're big exporters, and the value of the dollar has been very strong this year and has put downward pressure on sales of goods overseas. And so you can see there is some finance, insurance, and real estate has weakened a little bit, likely because of some real estate weakening. I have some evidence that suggests that that sector isn't as weak as it looks like. The data will probably be revised up. But if you look at the sectors that actually picked up this year, some pretty big sectors. Health and education is mostly health. Public education is in government. You can see education, healthcare has picked up after several years of weakness because of the uncertainty surrounding the Affordable Care Act and cuts in reimbursements by the government. The healthcare industry is seeing increased demand with the number of insured rising, and leisure and hospitality. Lower oil prices on net have a negative effect on Texas, but they have a positive effect on people like you and me who maybe aren't employed in the oil and gas sector, but we fill up our gas tank every week. And we've been seeing the result of lower oil prices on leisure and hospitality sector as people have more money to spend and are doing so. So some of these sectors are offsetting some of the weakness in the goods sector, and overall we've had about 1% job growth. If you look at manufacturing, we have a survey, 2 minutes. Holy cow. So be ready, I'm going to go really fast. So manufacturing has been weak. Exports with the dollar have come down. Texas exports have been, as I said, stronger, but have weakened over the last 8 to 12 months. This is the energy sector. You can see the rig count declining about the same as it did during the recession, about 2/3. And then the mid-year had a pickup, and now with the decline in oil prices, the rig count has begun to fall again. Well, I didn't not go that fast. So if you look across the state and you ask what sectors or what MSAs are doing well and what MSAs are doing poorly, if you had to find one indicator to explain that, it would be the size of the mining sector in each region. So this is the share of mining jobs. You can see that Austin has a very low share, San Antonio has a very low share, Dallas has a very low share. Those are the areas that have the strongest growth. And if you go down toward the bottom, Houston and Corpus Christi have the big MSAs have the biggest share of their jobs in the mining sector, and they're the ones seeing actual slight declines in job growth this year, or slight declines in job overall. Of course, down here at the bottom is Midland, Odessa. So if you look at what's going to happen going forward, the leading index actually is turned down with the decline in oil prices and the rise in the dollar. It had gone up for a couple months, but now declining once again, suggesting that instead of improvement over the last few months of the year, we're going to see kind of continued kind of slow growth. So Texas is doing pretty well relative to other oil and gas states. It's weakened quite a bit from last year, but overall we're going to hang in there and have about 1% job growth. And that's all I have. Thank you.